Hello and welcome to Gradient's weekly roundup of key news and activities in Sri Lanka's FMCG industry for the week ending 21st December 2021. First, a look at this week's headlines. Third quarter GDP contracts 1.5%, agriculture sector grows. Government agrees to pay $6.7 million to Chinese fertiliser company. Private sector wages rise, enabling increased festive spending. Essential food prices rise on supply side issues. We will also take a look at the movement of key FMCG industry statistics and indicators and wrap up with notable corporate news that made it across to our news desk. Sri Lanka's gross domestic product during the July to September 2021 period contracted 1.5% as economic activity was impacted by the 41-day quarantine curfew. The agriculture sector, accounting for around 8.7% of GDP, grew 1.5% year-on-year due to continued activity, according to the Department of the Census and Statistics. However, this growth is lower than the 3.1% recorded in the third quarter of 2020. Within the agriculture sector, significant increases were seen in growing of cereals, which was up 38% year-on-year, plant propagation and agriculture supporting activities, which increased 13.6%, and animal production, which rose 8.9%. However, the industries which caused the sector's slow growth were marine fishing, which was down by 10%, growing of vegetables, which declined by 9.8%, and growing of rubber, which dropped by 8.1%. The industry sector declined 2.1%, mainly due to the negative growth of 2.8% recorded in manufacturing of food, beverage and tobacco products, which is the largest contributor to GDP in the manufacturing industry. The government decided to pay $6.7 million to the Chinese fertiliser company. According to State Minister Rajapaksa, payment would be on the condition of the Chinese company resupplying the fertiliser in conformity to Sri Lanka Standards Institution specifications. Last week, Global Times reported that arbitration launched by the Chinese company Sewin Biotech in Colombo and Singapore is estimated at $49.7 million. On a related note, Sri Lanka is to import fertiliser inputs valued at around $63.7 million for the September to March Maha season, as per a letter issued by Mahesh Gammanpilla, the Additional Secretary to the Department of Agriculture. As per the Central Bank's informal private sector wage rate index, nominal wages among the private sector workers increased 17% year-on-year in October. Those in the services sector saw their salaries go up 19.7% year-on-year, followed by 16.6% in the industry sector and 12.2% in the agriculture sector. Whilst higher salaries may warrant higher consumer spending, increasing inflation in recent periods is likely to keep this in check. In November, food inflation increased to 17.5% year-on-year, whilst non-food inflation rose 6.4% year-on-year. On the other hand, public sector wages were stagnant on a nominal basis, which resulted in a decline in their real wages. Due to dollar shortages resulting in more than 1,000 containers being stuck at the Colombo port, imported essential food prices have significantly increased. Speaking to the Sunday Times, Nihal Senaviratne, spokesman for the Essential Food Importers Association, said that importers were unable to clear their consignments upon arrival and pay their suppliers on time, as they are forced to wait in line to obtain dollars from banks. As a result, importers are compelled to pay large demurrage and other charges to both the port and shipping lines. Additionally, Senaviratne said that foreign suppliers have become hesitant to take more orders due to such settlement delays. Moreover, at the coconut auction held on the 16th December 2021, the price of 1,000 nuts increased to 58,610 rupees, up 4.4% from a week earlier, as quantity on offer declined from a week earlier. Latest prices are still below 62,840 rupees recorded in May this year. Here's a look at the movement of key industry statistics and indicators. A significant rise in new orders of food and beverages helped to drive the manufacturing sector Purchasing Managers Index to a 16-month high in November. Many respondents in the F&B sector reported that they secured more orders in November than in the previous month in readiness for the upcoming festive season. However, the persistent rise in cost of imported raw materials from rising global commodity prices was highlighted as a major concern by many respondents across all subsectors. Additionally, the services PMI rose to an 8-month high, with wholesale and retail trade driving this increase. Agriculture producer prices, as measured by the Producer Price Index, rose 3.6% in October 2021 over September. This was mainly driven by the increase in prices of non-perennial crops, which rose 12.3% month-on-month, while producer prices of perennial crops declined 3.9% month-on-month. As per the Index of Industrial Production, food, beverage and tobacco production grew in October over September by 0.4%, 1.4% and 2.4% respectively, as industries benefited from the loosening of COVID-19 pandemic-related restrictions. Now let's take a look at the weekly movement of key FMCG sub-indices at the Colombo Stock Exchange. Here's how the rupee performed against the dollar this week. In corporate news this week, Dubai-based Group Tech, a tech innovator in the cloud kitchen space, has raised $13 million as it expands its offices in Sri Lanka. The company has a plug-and-play end-to-end operating system for restaurants and cloud kitchens adapted to the situation through its all-in-one technology stack. The company notes that this software enables a 25% reduction in time from when an order is placed until it is delivered, and a 35% increase in margins by maximizing efficiency of fixed costs and wastage. And that's a wrap for this year for us. We wish all of you a happy Christmas and a prosperous New Year. Until we see you again in 2022, thank you for watching and stay safe.